What am I going to do when the food comes?
Exactly.
I don't know.
Who's going
Just to
crack
let everyone
first?
know, we have ordered food. It hasn't come here yet, so you may see a couple of people eating
Sushi.
live on the webinar. Let's get going, and let's get. I do appreciate that people are busy, and this should last no longer than an hour. But look, thank you for everybody who's joining. We've changed it today. It's a lunch and learn webinar, so rather than doing it at 4 o'clock, do it 1 o'clock. Everyone can have a break from their day. We haven't done a webinar for a few weeks, and lots of people have been asking for them, which has been great. Really nice to hear. So yeah, we haven't done many. Today we will cover new updates. And we always want to reach out to as many business owners as possible, and we'll carry on doing these webinars when there's new updates and everything that's happening. So firstly, for those of you who don't know me, my name's Mitch. I'm CEO of Nordens. We're a firm of chartered accountants, a dynamic firm, I must add. Our mission is for everyone we work with to identify and achieve their goals and dreams. And for those of you that work with us already, I hope you can see that we've tried to do that throughout this period more than ever. And we will continue to do so. Let me introduce our guest today. You all may be aware of Joe. He's been on before, Joe Sword. Joe, nice wave. Joe's a director of Nordens, also director of our Strategic Consultancy Division. They provide strategic consultancy and advisory to a lot of our clients. Again, Joe's been on before. Mark's also been on before. Mark Norden.
Hello.
Mark is chairman of Nordens, also the founder of Nordens. Very impressive track record building up companies and helping.
It's enough. Stop, Mitch. Stop, please. No.
Very rare. I'll say that again. Very impressive, proven track record building companies and helping business owners through tough times. And I must add, has been extremely accurate so far in what's been happening. And hopefully, Mark, you'll be accurate in discussing what's going to happen. Otherwise, there's literally no point in you being on here. So yeah, and also Yoda. Yoda's new. Yoda's making her debut. Yoda is a director of Nordens and also director of our cloud accounting division. Yoda's heavily involved in helping our clients make digital transitions and helping them better their businesses as well. There's also Darren, another debutant to our webinars. Darren works very closely with Joe in his strategic division, but also heads up our corporate finance department, which will be key in this webinar. So welcome everyone. How this webinar is going to go today. So the first thing I want to do is we're going to chat with Mark about where we have been, where we're currently, and whether Mark thinks there's a new normal and if we should look to adjust as business owners. We'll then move on with Joe. Joe's going to, as normal, give us great headline updates in order what the government are doing, new furlough rules which come into play today, I must add, which you all should know if you're getting our newsletters, but we'll discuss all the new updates and so on. Once we've covered a brief overview of the updates, we'll hear from Yoda, who's making a debut, as I said before. We're going to discuss how easy digitalising is and how it can help your business. A lot of people complicate digitalisation, and it's actually really easy to make the transition, which we will discuss today. And finally, Darren, together with Joe, we'll be discussing simple ways which you can free up cash in your business. We all know cash is king more than ever at the moment. So it's a hot topic, and I think Darren and Joe will be able to provide some extremely valuable information. Once we've finished that, which should take no longer than 50 minutes to an hour, then we will have time for a Q&A at the end. For anyone who has any questions at any time, put them in the Q&A box, which you should find at the bottom, and we will touch on them at the end. So great, Mark, welcome to I think this is your third time on Nordens webinar. So tell us a bit about what you're thinking right now, where we've been, what we're going through, where we're going. I'll let you carry on from here.
Right, so I'm going to start off with the economic side, and I have to apologise. I've written this down because it's so negative that I don't want to keep these things in my mind. So I'm going to read
just what we want to hear. Negativity.
Exactly.
Thank you.
The positivity will be when my food comes. But so if I read this to you, the new Bank of England governor last week said that if they hadn't intervened in March with quantitative easing, Britain would have gone bust. Now, I don't know exactly what that means, but it doesn't sound good. If you look at the Bank of England, the interest rate at 0.1%, there's absolutely nothing that they can do to help us. The economy shrunk by 20.4% in April, the steepest fall in history. 9 million workers are on furlough. Bounce back loans of more than £26 billion since it started. And the only way that the government can get us out of this is by looking to increase in infrastructure spending just to reduce unemployment. Positives or negatives, whatever you want to take from it, internet sales in February were 18.9% of total sales, compared with currently 32.8%. So it just shows how the world is changing.
Nearly doubled, isn't it?
Yeah. So if you look and you say, the economists at the beginning of the lockdown and during it have been really negative to say it's going to be the worst recession and blah, blah, blah. And without getting really, really detailed about it, what they're now saying is that it's going to be a V-shaped recession. So we've had, I know we were talking about it earlier, Mitch, recessions happen. They've always happened. Every 7 or 10 years, recessions happen. It's just a nature of life. It's just part of business. A recession would have happened, but this is a completely different recession than has ever happened before, because the government actually closed all the businesses. So we went from where we are there to straight away nothing. So it's not surprising that we shrunk by 20%. What's surprising is the fact that we only shrunk by 20%. And what they're now saying is the government, the economists at the beginning were saying that the recession would be a really deep, really horrible recession. What it sounds like now is we've had this huge drop. And now, of course, with everything opening again from the 4th of July, things are going to start rebounding really quickly. You know, I'm getting my hair cut next week. We're all going to go for a beer at the pub at the weekend. We're all going to go and start spending money. The money's going to start circulating and things will start growing really quickly. So normally with a recession, you have a low, slow recession where things are getting worse. Fear kicks in. Everyone's really scared. No one wants to spend money. This is just so completely different. So doors shut, vertical drop, and it's going to start growing. I think the unknown is what's going to happen with companies where they can't work at full capacity. So restaurants and pubs where it's only 70% capacity. Will they take everyone back with the furlough? The whole reason of having furlough was to delay people making them redundant, because once someone's unemployed, they're unemployed. They're not going to go back again. And, you know, we were speaking about it this morning into the property company with just looking this figure up. They had properties valued at the end of last year at £6.6 billion, and they went into administration. You've got Virgin Atlantic looking for a £900 million bailout. It doesn't matter on the size of the company; it's affecting every single company. And it's going to be painful. And I think the interesting thing is, it's going to grow quickly. It's whether how long it takes to get back to the level we were pre-lockdown. And it's also going to depend on the level of unemployment, because the more unemployment, the more fear, and then it will be a longer. Oh, I've got to go. My food's arrived.
So, question mark. Do you think we're through the worst of it?
No, I think the worst is going to happen definitely within the next 9 months. In 9 months' time, all the PAY and VAT that have been delayed are going to be payable. Businesses are going to have to finance them. The loans that where the government have secured them or guaranteed them, they're going to be paid. I know they're interest free and loan repayment free for a year, but companies are going to have to pay them. And I've got this great quote, which I'll never be able to find now because my food's come along, which was, so researchers found that 60% of firms with a turnover less than £500,000 will struggle to repay the loans. And it's fairly obvious that anyone who gets through this, you've got to be super profitable. You're going to have to be profitable enough to make a profit to stay where you are. And you're going to have to be profitable enough to pay back the additional VAT or PAYE that you've deferred. And you're going to have to be additionally profitable to actually repay the loans. So I definitely think the worst is yet to come. I think furloughing obviously is being layered out. And as that starts being removed, companies are going to start making decisions that they've delayed making. So yeah, I think the worst is going to come. But I think the interesting part is we've seen some of it with some of our clients. Some businesses are just set up in the perfect place where they have the right business at the right time, and they are doing, unbelievably well. I think other businesses have changed what they've done. They've changed their model. Do you know the one we would use all the time? The personal trainers at gyms, where all of a sudden they've been doing their courses online.
Yeah.
I think anyone who's pivoted their business to be able to do it, and I think it's going to happen in the next phase, and the government are helping businesses do it. With restaurants, they're allowing them to have outdoor seating without having the planning available. They're going to try and do anything they can so that businesses can pivot, be able to offer additional services or get closer to full capacity, just so that we ride this through.
So that's okay. So like you said, you've been extremely negative.
And I'm happier now, look.
For every negative, there's positives. So
yes.
What, I mean, at least give us one positive that we can take from what you think we can take.
Well, I think the future's, I wouldn't want to be an airline business. I wouldn't really want to be in hospitality at the moment. I think they've got their own issues. But I think just generally with businesses, I think it comes down to mindset. Your business, you are whatever you think you are. And if you think your business is going to fail, it's going to fail. And you can just see how many people, just pre-lockdown, I was, petrified for a weekend that everything was going to go wrong and we were going to lose everything. And talking to business owners the first few weeks, it was just painful. We thought, everyone's going to go out of business. But it's not the case. You speak to people every day. We all speak to business people every day. Most people are quite optimistic about where they are. And I think because this recession is going to be different to any other one, because it's that straight drop, the ones who have been hit and are at the bottom are going to have problems. But I think the rest of the businesses that can pivot and change, I think they're going to grow quickly. And I think there's a real opportunity. You know what I'm like anyway. I like doing the opposite of what everyone else does. If everyone else is in reverse, I want to go full way forward. You know what we're doing with our marketing. I think there's a great opportunity for growth. During recessions, there are companies that come through and do fantastically well.
Yeah, I think I've been speaking to a lot of business owners more than ever over the last few months, and I think for the last month, 6 weeks, it's extremely positive. Most business owners are talking about how busy they are and so on, and I think it's quite people's attitudes are changing. I think that you say they're becoming a lot more optimistic.
I think if you've got a business and you're in the right space at the right time, brilliant. If you've got a business that you can pivot and change it and make it work, say a restaurant with outdoors, personal trainers where they're doing it online, anything like that, I think they'll create it. I think other businesses which have got fundamental flaws where there's something actually, the companies that had problems pre-lockdown, this is only going to make it worse. And when it makes it worse, I think they're going to have no choice. But as we've said before, people who are entrepreneurial are generally not going to be able to go and take a job with someone else. I look at myself, I'm unemployable. No one else apart from you guys would employ me.
I don't think I'd employ you. Sorry.
No, exactly. but anyone who's entrepreneurial is not going to be able to take a job because, first of all, the jobs may not be available and they're probably unemployable. And I think if they have no choice but to run a business, which is probably the case, it all then comes down to mindset. And if you're in the wrong business, you need to change your business. And I think it's about pivoting, changing direction. But I think there are just great opportunities out there. And if you haven't got great opportunities, you've got to change that business model because it's not going to get better.
So if you can, actually, before I ask you that question, they're potentially saying that there could be another lockdown. Whether you agree, whether anyone agrees, doesn't matter. But they're saying it, there's talk of it. Do you think the government can afford it? Do you think they'll be able to do what they did previously?
Yes, because I think this recession is different from others. We won't have austerity measures after this. They'll do whatever they have to do. If they didn't put the money into it, the risk to our economy is too great. What it would cost just in unemployment would be huge. So they will find the money. They will create the money however they need to create it.
Okay, that's interesting. And if you could give any tips to any business, I guess you already have, but any other tips to any business owners watching this or who are going to be watching this, what would it be apart from to pivot if you possibly could?
I think the number one thing would be to get in control of your business. And, you know, we've spoken about it before. Understand totally about your business cash flow, make sure that you can get through it, totally understand break-even points. I think number one, be in control of your business and work out what the future is for your business. And if it's not going to work, start pivoting, coming up with ideas to change the idea, change it, because it's just not going to get better. And to me, it's about mindset, and something we talk about all the time. If people can change their mindset, anyone can achieve anything. There's no rule in the outside world that you can't be the best at whatever you want to be. The only person that ever says we can't achieve something is ourselves. And I think that's what we have to deal with. And I think number one, get in control of the business, you understand that. Number two, get in control of your mindset so that you can actually be positive to actually resolve any fundamental problems with the business.
Yeah, good. Thank you. I think it's worth saying as well that we have set up something to help people with that.
Yeah.
It was something that we moved quickly to do, which I'm sure we'll hear about shortly with our accelerator program, which actually helps people change their mindsets and helps people to pivot and so on. We touch on all different areas, but we'll chat about that further down the line. But Mark, thank you. It's been really, really helpful. You can get back to your sushi now. Talking of the accelerator program, Joe, obviously that's part of your strategic department. And I guess we'll discuss that further when we talk about how to free up cash in your business, which is obviously massive. Why don't you give us, well, I know you're going to give us the updates from the government of what's happening at the moment.
Yeah, so as you mentioned at the start, I'm going to do my best to give a really quick overview of the key changes. And I just mentioned that anyone that would like any more detail about how these incentives work or any detail about applications that I don't mention today, just have a look at our care pack. We're still updating that. So check that out and ensure that you have the tools and the knowledge to make sure you're staying on top of everything. So I'll jump straight into it. First of all, let's start with furlough. So thank you to Jane, our head of payroll, who's put together some key guidance for me today. So from today, to ease the transition back to full-time employment, employers will be able to agree a part-time working pattern for their employees. So that means that basically employees can agree to come back to work for a few days or hours even per week and then receive furlough pay for the remainder. So it's become split, whereas before it was quite rigid in the sense that if you're on furlough, you cannot do any work. It's changing slightly now to transition back to getting people back to work. So there's no requirement for those people going on furlough to have a maximum of 3 working weeks off anymore. And that's going to enable employers and yourselves to better manage the workflow. So as a simple example, an employee can work 1 day for the first week, 3 days for the second, and then no days at all for the third week, followed by 2 days for the fourth week. And that will make a total of 6 days worked at full pay. And then the remaining 17 days can still be claimed through furlough at 80% of their regular salary. So having fewer people working at any one time and mixing it up in that sort of way can make it a bit easier to enact the social distancing rules while we're still in this sort of critical period. So employers will only be able to furlough employees that have already been placed on the scheme for the full 3-week period prior to the 30th of June. So prior to yesterday, you can only apply this rule for the employees that have already been on furlough in some way, shape or form already. Those who do not wish to take advantage of the flexible furlough can still use the original furlough, the 3 weeks set rule like it was before, all the way up until the end of October when the scheme closed. But the scheme will close for anyone that hasn't received any furlough payments before the end of June. So if you've not used furlough for certain employees, you cannot now go on to furlough. It's too late, so to speak. There are other changes, and every single month from here on out until October, when the furlough comes to a complete end, there will be slight tweaks and changes. So keep aware of those by visiting our website. But the main changes are going to be around who contributes to the national insurance. The employer's national insurance contribution and the pension contributions can still be claimed up until the end of this month. But from the 1st of August, these contributions will no longer be funded by the government and can't be part of the furlough. So bear these in mind. Things are gradually changing and making the shift back to how it was. But at the moment, things stay as they are for the end of July, but the part-time working is in there. So like I said, things will be changing every month. Keep checking our website, looking out for our newsletters, and we will be keeping you up to date. But right now, that covers the main key change in furlough in the sense that the part-time work is now allowed and you can cover the remainder through furlough. So that sort of leads us on to key things to consider in respect of getting back to work itself. So Sharon, our head of HR, has been doing a great job at our office, making sure it's all ready for everyone to come back. And we're looking forward day by day to welcoming more people into the office to get back to how we were. So a few quick tips to get yourself positioned to go back to work and your team. So firstly, carry out a simple survey to find out any concerns your employees or your team members may have on coming back to the workplace. So things, just asking simply, what are they concerned about, if anything? How do they get into work? And do they already have any solutions to any of their concerns? Carry out a risk assessment of your workplace to make sure that you're complying. Understand and implement simple, sensible adjustments that you can make. So we've done things like implement a one-way system throughout the office, putting in social distancing measures by using tape and things like that, just to map out where you should be going and how close you should be getting to people, providing ample hand washing facilities and hand sanitizer in and around the office, putting up simple signage, reminding people of the safety measures, and having the office deep cleaned and regularly disinfected by things like fogging. That if anyone's checked out our Instagram page, you'll have seen what we've been doing pretty much on a weekly basis. So the other thing that's really important when considering getting back to work is making sure that you're aware of any team members who are classed as extremely vulnerable, so at high risk of serious illness from COVID. They will have received a letter already advising them to what's called Shield, and they will be able to return to the workplace from the 1st of August, although they should not be forced to do so. So clinically vulnerable people are the ones that are classed as being at high risk of severe illness from this pandemic, and those people with underlying health conditions and pregnant women. So disabled workers, expectant mothers should be continuing to work from home, insisting on them. And if you insist these workers come back to work, it does give you the potential to be sort of prosecuted for discrimination at work. So you have to be really careful with those select group of people. So just make sure you communicate with them and keeping them in the loop and getting an understanding of how they feel about it all. You shouldn't be forcing those type of people to come back to work under any circumstances. Other things, stagger arrival and departure times just to minimise the impact of people being in a tight group all at one time. Continue to do big staff meetings via things like Zoom so people can stay in their own space. Ventilate the workspace. Ensure that everyone actually understands social distancing, including people that are visiting your places of work. Avoid face-to-face working wherever possible. Working side by side and back-to-back is safer. And just work with your employees as they gradually return to work. So as an employee, you have a duty to look after the health and safety of your team. So just make sure you're constantly chatting with them and don't just think, oh, right, we're all back to work now, everything's okay, because people might still be having concerns. The business-specific guides and checklists, there is something that's been published on the HMRC website. So if anyone's interested in getting a bit of a clearer checklist together for their own specific business, just let us know and we can provide that after the call. But it's quite good because it's quite business specific, because there's different things that different businesses and different sectors have to consider. The next thing is the self-employed grants. So there's been an update on those too. My colleague Stephen, who works with myself and Darren in our strategic team, has been helping with the changes on this. So the first grant for the self-employed covered March, April and May. And if you are self-employed and your business has been affected by COVID during those months, we urge you to get on the HMRC website and firstly check your eligibility. Time is now running out. The window for the first grant closes on the 13th of July. So you basically have less than 2 weeks to make a claim if you haven't done so already. So if you haven't yet and you feel you may be eligible, get on HMRC's website ASAP and check. So since the first grant, to kind of balance things up with furlough, the government have announced a second grant for self-employed people, which will relate to the months of June, July and August. It will be available to claim in August, and it will be a one-off payment. It will be slightly less than the first one. So the first grant was 80% of your average monthly trading profits, and it was capped at 7,500 in total. This second grant will be 70% of your average monthly trading profits, which will work out at a cap of £6,570 in total. So it's still a nice, healthy amount if your business has been affected by coronavirus. So if you're self-employed, just do the simple things. Check your eligibility. If you are struggling, contact us at Nordens, and your client manager or whoever will be able to help you. But hopefully those people who are self-employed on the call today have already made their first claim, and they're waiting in the wings to make their second claim. So just a quick one on who can actually claim. So really, you're able to claim if you're self-employed and you've traded in the tax year 2018 to 2019. So 1920, like I've mentioned before, is not relevant for this case, but you do need to be trading in that tax year. So 1920 will not form a basis of your profit calculation for the grant, but you do need to be trading in the current year. You cannot stop trading. You also need to continue to trade in the 2021 year, which we're in now. So basically, it's just to stop businesses that were self-employed and are no longer self-employed from getting the grant. You also need to be able to kind of show that you've been adversely affected by the coronavirus. So it's just important that you're able to demonstrate that business has been struggling because of it, and I imagine you'd be in the majority there, because most businesses will have found it tough during this period. The other things to mention is around the VAT deferral. Now, this has caused a few issues, so to speak, because it wasn't totally clear about this when HMRC mentioned it. A lot of business owners have thought that the quarter end in May would be able to be deferred, but technically, because you've got till the 7th of July to make that payment, that quarter is not eligible for a deferral. So effectively, it's the periods are February, March and April. So any quarters that ended in February, March and April, they can be deferred, but not the May quarter, which was a bit cheeky in my opinion from HMRC, but it is what it is. Our VAT team have been really on the case, checking and making sure there's no way around that. But in simple terms, the May quarter doesn't count there. There's also a change to VAT, the VAT law, to introduce a temporary zero rate for anyone that is supplying PPE, personal protective equipment. So it's worth that bearing in mind and knowing where you stand with that if you are a business that does that. But yeah, although the deferral has technically stopped as of today, there's no more deferral. HMRC is still being lenient, so they're still looking to help with payment plans. They're still looking to work with businesses in this time. So don't panic too much. Just make sure you're speaking up if you are finding it difficult to make your VAT payments, because although the deferral is not there anymore, there are opportunities to still work with HMRC, so you're not stung and you don't have a massive VAT liability straight away. Again, just speak with us if you need to, and we'll be able to do everything we can to help you there. There's a couple of last things I just want to touch on. They won't take long. Business rate grants. If you haven't already approached your local council, you haven't been contacted, chances are you're not likely to be eligible. But still, if you feel you may be, still speak to them, because there was discretionary funding put about at some point, and it's probably likely to have dried up, but it's worth a try anyway. Just speak to your local council and see if there's anything available for you. And the final thing to mention is, I'm sure most people would have seen that credit cards, store cards and catalogue credits, personal loans are able to defer their repayments for another 3 months. Of course, it is only a deferral, so it will be needing to be paid back just like everything else. Bank customers have already been allowed to apply for an interest-free overdraft of up to £500, and anyone that wants to take advantage of that can apply.
Well, I think there's been a technical error. But
the end of October. So I think in a nutshell, really quick whistle-stop tour of all the key developments since. Did you catch that or not?
I think so. How do you apply for the overdraft?
How do you apply for the overdraft? You need to. I reckon.
Yeah, no, that's all we heard up to.
Yeah, that was all. I just said back to you after that. So you didn't.
Oh, right, okay. All right, Joe, thank you. I will hear from you in a bit. So yeah, no, really good with the updates. So we're bang on time at the moment, which is brilliant. So Yoda, welcome, debutant to our webinars. You obviously head up our cloud accounting. With COVID-19 basically forcing everyone to go digital, I think a lot of businesses who haven't made the transition yet, it it can come across pretty scary, and people think it's a lot bigger than what it actually is. But it's actually extremely positive and valuable. And why don't you give us a bit more information about kind of what it is you're doing with a lot of companies and business owners at the moment to help them?
Yeah, of course. Hi, everyone, by the way. I didn't say it earlier. Of course, yeah, it can be really daunting. If you're used to doing your bookkeeping in a certain way, whether it be, you know, the big red book or you've got desktop bookkeeping software, it can be really daunting, like you said, to make that move. We have been forced into it of late, like in the last few years, there's been so much talk about making tax digital, MTD rules that came into effect for VAT registered companies in April 2019. Obviously, it's going to be effective for all companies from April 21 as well. Of course, like you said, now with COVID, you're having to give transfer of data and stuff like that with your accountants, with your bookkeeper, for key people in the business digitally. So now is the time, and it's the best time for us to get that set up. Things I always recommend our clients when we're setting them up is to do a little bit of research, see which softwares that they think are going to be useful to them and that will give them the right reports. Get a free trial. Most cloud bookkeeping softwares allow a week free trial. So get yourself set up on a free trial, have a play around with it, get your bank information on there. You might not want to set up the automatic feeds if you don't know that you're going to keep it, but you can still transfer the information through like Excel and stuff like that. Start raising a few sales invoices, upload some purchase invoices, do a reconciliation, and kind of navigate your way through the software and see how it works, how it can save you the time, and also what reports you can get. You obviously don't want to be making the move if you're not going to get the same kind of valuable information that you would with your current bookkeeping software. So if it doesn't work for you, obviously there's other choices, but it's unlikely. Most of the cloud-based softwares give you the same reporting as the desktop softwares out there, if not more. But definitely, first key thing would be to trial it out. Have a trial, have a feel before you make any decisions.
Sorry, Yola, what would you recommend is the best software that you work with?
So we're obviously platinum partners with Xero. The reason we're platinum partners is because, we're platinum partners is because we have so many clients on it, because that is who we recommend. We think it's really easy to navigate from. The reporting on it is really great. The functionality is just really good. So we're really, we recommend that to clients, and obviously platinum partners with them. Might not work for everyone. So if you need something a bit more in depth, then there's other softwares out there.
But also with sorry, before you carry on, with obviously the whole COVID-19 and not being able to, you know, the touching of paperwork and so on, which it's some people in different positions and some people don't feel comfortable with it. It can also be hugely beneficial for that, because we don't actually need the paperwork behind it, right?
Exactly. So with Xero, they've got something called HubDoc. So HubDoc, you can upload your purchases, like take pictures or scan in purchases to the software. It's still quite new, so the functionality, it has got real functionality, but we do use Receipt Bank, and it has got a few more features on there. So we do recommend either one, HubDoc or Receipt Bank. But even if you're not using a cloud-based software, we use Receipt Bank with our clients. We get them set up. They can take a picture of all of their invoices through the app on their phone, or they can just email the software with all their PDF copies of their purchase invoices, or upload them as normal. So really easy, simple way to get us the information without having to leave their home, without having to give us anything to touch, without having to print things off. So we've definitely been making use of that of recent months to make sure that clients are being able to give us information safely, like you say.
Sorry, do you want to carry on? Sorry. Then.
No, I was just going to say about 2 other tips I would give on making the process, like streamlining the process and making it a bit less daunting.
Go on, go for it.
Yeah. So the other thing I would say is choose the right time. Time is everything. Obviously, the best time is going to be at your financial year end. So you start the new software at the start of your new financial year. What we would recommend, if you are going to do that, is that you still get something in place and you start it from like a month or two before, so that you can get the bank feed set up, you can navigate your way through it, and then as soon as the first day of the new year starts, you're ready to go, and you're not going to have any duplication of information. You're not going to continue with the old software and then have to re-put it into the new software. Of course, that's an ideal time, but definitely not the only time. We can transfer information from one software to another, so we can definitely do that after you've reconciled it, maybe at the end of your VAT quarter, or just at month end when you've reconciled. We can definitely still help you with that transition and help you to get the information that you currently hold on your old software onto your new software. So that's easy as well. Another thing, before you're going to commit to anything, have a look at the training videos. Most cloud softwares will have training videos that you can watch online, that really simple, easy user guides. But also, of course, if you can get training with your accountants, we offer training as well, hands-on training, so you can get a real feel for how it can work for your business. So yeah, those are the three things I would say. Like, have a feel for it first, make sure it's the right software for you. Timing, make sure it's the right time, get things set up in the background before you're ready to go live with it, and training before you go ahead.
I've got a couple of questions for you.
Yeah. Sure.
Obviously, the next topic that we're going to go on to is simple ways to free up cash and improve cash flow. Mm-hmm. How digitalizing and using a platform like Xero, how can that help you free up cash? So when I say free up cash, improve your cash flow.
Improve your cash flow. So you're going to have up-to-date information. When you're using a cloud-based software, you're going to have up-to-date information. I did touch on the fact of bank feeds. So you can have automated bank feeds, which means that your software would communicate with your online banking. Whatever your online banking shows as transactions would show into your bank. If you're using the simple tools such as Receipt Bank to upload your purchase receipts and stuff like that, as and when they happen, you can reconcile daily and really easily. So you've got up-to-date information every day. That up-to-date information is what's going to be so vital when we're doing cash flow forecasts. The information has to be correct and up to date for you to be able to forecast what's going to happen in the next few months. So having all that set up in a really convenient and automated way will be able to support you in getting that cash flow information that you're going to need.
And can you give us an example of how you've managed to help a business by digitalizing them, whether it be free up time or free up more cash for them? It'd be nice to hear an example.
Yeah, of course. Well, we obviously, this is what we do within our department. We try and streamline as the processes for businesses as much as possible. So there's so many there's loads of examples, I guess, but the things that clients are really gaining from is the automation. The fact that people aren't manually going in and having to type up your bank and manually put in the transactions of you're looking at your purchase invoice, you're having to put that information into your thing. There's none of that. You've uploaded it, the information's in there, the bank talks with the software. You save so much time. So whether you're doing the bookkeeping yourself as a business owner, you're freeing up your time to be able to do what you do best and navigate through this time and just do what you do best to be able to generate sales and things like that. Whether you're paying a bookkeeper, it's cheaper for you, not needed for as many hours, or you can use them to help you with other things if there's someone that's within the team. It's obviously cheaper. Cloud-based software is about £20 to £30 a month, depending on what you need from it. Whereas, the traditional desktop software companies, they can be up to like £3,000. We did have a client in particular, and he's quite an older client as well. I'm pretty sure he's either late 70s or early 80s. So we were a bit concerned about whether he was going to take, how he was going to take to the new software, because he's been using, the old software desktop version for so many years. We just thought it was going to be a bit tricky. He's made the transition, he's saved thousands of pounds, and he loves it. The automation and everything, it saves him so much time. He absolutely loves it. So it's making you more efficient, making you use your time on the things you should be using it on, running the business rather than, like transactional processes, and saving thousands of pounds of money. It also means that you can have multiple users. You're not having to, if you've got, not traditionally, you'd have the desktop version of bookkeeping on one computer in the office, and you'd have to kind of, if anyone wanted any information, they would have to all kind of share or wait for the person to finish with the computer to be able to get on there. Being on the cloud, everyone has access to it. If you've got internet access, you can get on to, you can have as many users as you want on the subscription, so everyone can have the same access and be able to do what they need to do for it. So it's really transparency between the teams as well.
I think as well, with all the, which we'll hear from Darren and Joe in a minute with regards to the funding and things you can do. But I think, you know, one thing that banks will require to get any sort of loan, Darren just nod, is up-to-date information. They're going to want, you know, always as well, not for the bounce back loans, but for any CBILS loans or any other loans, they want accurate, you know, they want to know the ins and outs of the finances. They want to see management accounts. And I think if something like Xero's, if the cloud system's kept up to date, you can literally pull this information off at a click of a button. And I think, you know, it's very, very difficult when everything's done on spreadsheets. And, you know, normally most businesses or a lot of businesses that haven't made the transition have about 10, 15 spreadsheets. And to collate all that information and produce the information quickly for a bank to look at is quite difficult. And I think using a cloud system is just so easy to just, you know, providing it's up to date, click of a button, you've got all the information you need. So I think it's really, really beneficial. And I think anyone that hasn't made that transition should look to get some sort of system, as Xero is so easy to use. And the information and the reporting, like you said before, is really, really simple. And it's paperless. Take a picture, goes in, bank statements, upload automatically. It's really, really easy. But yeah, no, I appreciate that, Yoda. Thank you. I think now it's a really, really hot topic, being that everything's pretty much fast forwarded and going digital pretty quick. So I think it's something that everyone needs to look at. I am aware we are getting questions. We will touch on these. We will have time to go through these at the end. I think there are some being answered as we go. But yeah, thanks, Yoda.
No worries.
Darren, Joe. Darren, another debutant to the webinars. Joe, Darren, you're on mute. I'm just going to unmute you, or just unmute yourself. So I want to discuss, I mean, obviously cash is king more than ever right now. And I think one thing that is important is there must be simple ways. And I know you do this. I know you've been with the IAP, you discussed, one of the topics is cash. And I was on it actually a couple of weeks ago where we discussed it, and you were giving some great tips on how to free up cash quickly in the business. I'm going to let you both start. I'll let Joe start first. Joe, give us some ways you can free up cash. Simple ways, quick.
Yeah. So, I mean, before we get into some actual kind of ways, I think let's just take a step back, and I'll kind of give a bit more background about the IAP, or our Interactive Accelerator program, which we've developed. So we've been working on our strategy department for a couple of years now, and it's quite price sensitive. And we were having a chat, and Mark came up with the idea that we need to try and get a wider range of people, give a wider range of people access to strategic support. In this current climate, it's probably more important than it's ever been. And what we've developed is we've developed our IAP Interactive Accelerator program. And I believe we've got a couple of people on here listening today who are actually part of that, which is great. And what we aim to do is connect business owners with our strategic team in a group or family environment and focus on support, action, and accountability. And we find that those things are quite often lacking with business owners when they're left on their own, because it's like I've mentioned in the past, it's quite lonely at the top being a business owner. So they're the things we focus on. And when we were talking about simple ways to free up cash, like you mentioned, our program is centered around our Wheel of Success, which is 7 key drivers of successful businesses. One of the segments, like you mentioned, is cash. But when I went away and thought about this, it's quite interesting how many of the other segments actually interlink with each other here. So when looking at your overall cash landscape, it's quite interesting to see the other segments, how they play a part. So like Mark mentioned earlier, one of the key segments that we focus on is mindset. And having a growth mindset and believing you can and will achieve what you want is massively important, even more so than in difficult times than it is in positive times. So like we've mentioned, for every problem there is a solution. And it's sometimes just as simple as taking a step back, relaxing and looking at things from a different angle, or speaking to someone who can support you and put an unemotional frame on the scenario. Because when you're bogged down in your business, it's quite difficult to step back and take the emotion away from it, because it's your business, it's your baby, you really care about it. So it's hard, but someone from an external perspective, like we see on the mastermind groups that we put on, it's nice to hear other perspectives, and it relaxes people or reassures them. So there's no doubt that when you're running your business throughout the years, you've had some form of cash strain, and I'm sure you will have overcome it. And this situation is no different. The solution may be different this time, but starting point above everything else is believing that you will find the solution and actually focusing on that solution and not the problem. So once you've got yourself in the right frame of mind, the next really important thing to do is actually look at your goals, which is another one of the segments on the program. And I think before you rush headfirst into knee-jerk reactions around acquiring finance or making big decisions around your cash and related cash flow, you need to really be clear on what it is that you're looking to achieve, because that will ultimately shape the decision. And as Mark mentioned, and as I've mentioned on pretty much every webinar, you should be forecasting and reviewing your forecasts on a regular basis. You need to look at your cash, but you also need to look at your profitability, because there is a difference. So good quality forecasts that have a scenario built in with them, and a what if analysis, as we would call it, where you can look at different scenarios and what if this happens, what if that happens. It will allow you to set yourself targets, gauge where your pinch points truly are, and have a proper grasp on how far away from your goals that you are, therefore concluding what it is that you need. So once you've done this, you're now feeling much more control of the situation. It will allow you to make the right decisions. So based on the webinars and all the advice we've been given, a lot of you have prepared short-term preservation forecast, which is a good and first necessary step. What you now need to be doing is looking at the short to medium term with your forecasting and putting them together in light of these government initiatives that we've mentioned starting to ease, furlough coming to an end, to get yourself more into a sort of a pre-COVID environment, because the initiatives and the incentives that the government have put on at the moment have been great, but they will expire. They are going to go. So we need to avoid the reliance on them, so to speak. So like we've mentioned, we're embarking on a new normal. So putting together your longer term forecast, you need to be thinking and asking yourself, well, what worked in the past? Will that now continue to work in the new environment? Because a lot of things are likely to change. So with your mindset right and some clear goals and targets in place, some of the key things you can look to preserve and attract cash include, obviously, taking advantage of the government initiatives while they're still out there, looking at your HMRC position to defer, put payment plans in place and stretch your liabilities wherever possible, looking and dealing with and communicating with your suppliers, your landlords, and looking and asking to agree more favourable terms. Explain that this business is going through the situation that it is. They'll be well aware of it, and now's the chance to say something before it's too late. Doing something similar with your customers, exploring retainers, deposits, and upfront payments. It's not considered enough, and I think this is exactly the time that you need to be thinking, right, how do I make my service a recurring service where I'm getting regular income? Because that will give you a much better cash cushion, and it will stop that volatility within your business. And staying with customers, make sure you invoice promptly. The amount of businesses we've seen over the years that don't invoice as quickly as they can, you know, it's so important. If you're not invoicing on time, you're not going to get your money on time. It's so important. Chasing for payment just as promptly. We get business owners that invoice brilliant, but then they just leave the chasing and just expect it to roll in. In this time, people are going to be looking for ways to avoid making the payment. So it's so important you're regularly talking to them and you've got that firm credit control procedure in place. And if it's that far down the line where people are simply ignoring your request, sometimes look to get a legal team involved, because we've had it quite a lot where a simple legal letter is all it needs and the people will pay straight away, and it doesn't cost you a lot, and it just basically says, I'm not standing for it anymore. You need to take this seriously and pay me the money that you owe me. The other thing to look at as well is looking at your team. I've mentioned before in one of the earlier webinars, the pandemic has given everyone a really good opportunity to critically evaluate the team, and there's not a better time to make tough decisions that you've potentially been putting off. They're always going to be tough, and we do understand that, but it's now more than ever is the time to remove that emotion and make the right business decisions, because you cannot afford to be carrying people at this time. And the next thing is looking at your systems and processes, which is another segment on our wheel that we covered earlier this week with one of our groups. As Yoda's mentioned, in an even more technology-focused world, it's so important to make the most of technology. We've been working with a client who have went through an automation process, and I think it worked out that they've saved 3 days a month just by the first stage of the automation. And if you can quantify that and put that into time costs and people costs, the savings are absolutely phenomenal. So it's so important. Like Yoda mentioned, really look at that for your business. If you're working on multiple spreadsheets and you've got other mundane tasks that are taking too long and you're not getting anything from it, make the most of it. Look at automation options. And in terms of raising fresh cash itself, you can look at freeing up and consolidating your own personal assets. But like everything else, it should be properly thought through and forecasted and considered alongside your other options. But one thing's for sure, there's never been a better time to utilise funding opportunities that are available. So this is a perfect time to bring my colleague Darren in, who's been sitting there waiting patiently. He heads up our corporate finance team, and he's going to talk a little bit more about the opportunities that are out there, not just now, but when the COVID-related incentives finish. So Dale, thanks for waiting. Over to you.
Before you come in, Dale, I think you briefly mentioned payment terms before. I just want to give an example of a conversation I had a couple of days ago with a client. They changed their payment terms because people were taking too long to pay them. So what they did is they reduced their costs by 10%, but asked for 50% payment up front. What that did was allowed them to obviously get cash up front and put them in a much better cash position, which is, I guess, an example. I just wanted to share that example of what Joe was mentioning before with payment terms, but it's really working for them, and it's put them in a much stronger position for their business at the moment. But sorry, Darren, welcome. Yeah, do you want to follow on? What's out there at the moment? Give us an update.
Well, I think the obvious thing that's out there at the moment is the government initiatives, the bounce back loans, the interruption loan scheme. They're going to be the most lucrative things right now, because, like, following on from what Mark and Joe were saying before, it's that there's no interest on them for the first 12 months. You know, the government are covering all fees to do with it. So really, you know, even if it's not needed right now, that's money that can be sitting there in an account as a buffer, just making you feel a little bit more comfortable and kind of easing the mind, so you can actually focus on what you should be doing in the business rather than worrying about, am I going to survive it? So they're the obvious things. I mean, going into a little bit more detail, the bounce back loan is probably the easiest piece of finance I've ever known to be able to secure. I had someone on Thursday night actually apply for the bounce back loan, and on Friday before midday had the money in the account, which is it's just crazy how fast you can actually get your hands on this sort of money. But it is capped at 50,000, so you need to establish whether or the amount you actually need before looking into these products and what's out there. So if you're looking for anything sort of above 50,000, you need to be looking at the interruption loan scheme, which goes up to 5 million. It is a lot. You have a lot more hoops to jump through and a lot more information to have to provide, and it's a bit of a pain.
What's the time frame? What's the time frame to get to get a C-bills?
From the moment you apply, I mean, it can take. I've seen it take between sort of 6 and 8 weeks to be able for people to get through. I actually know some people that have applied almost immediately as it sort of became available, and only received the money a week ago. So that's just there's just massive delays. But it's because they're underwritten the way normal finance would be. The bounce back loans aren't underwritten that way, and you can almost self-certify that you need the money, whereas the C-bills are looked at just like a normal piece of finance. They have different security forms of security. For example, the personal guarantee is waived up to 250 grand, but it is still looked at as a normal piece of commercial finance. So the first thing they're going to check is, can this company afford it? Is it affordable for them? That'll be the first stage, you know. So.
But I think I think going back to what Yoda was saying before, I think a lot of the delays would be to do with not being able to provide up-to-date, accurate information.
Massively.
So I think how important. I mean, do you want to reiterate how important
it's so important? if we're looking at normal commercial finance, I've seen it where people just take the last submitted sets of any accounts, or as up-to-date management information as you've got, anything will be helpful. That's not the case with this. Now, I mean, I've had things being rejected or turned down because it's over a month out of date, just 1 month. But most people are saying if it's over 2 months, then they're not prepared to look at it. But I mean, they want bank statements even that, you know, that are less within a month. They need real up-to-date information. The other thing they're looking at is forecast information, which lenders typically have never asked for because they don't fund based on forecast or judgments and you know what you feel may happen. They judge on or they underwrite on facts and statistics. So it's strange that they're asking for this sort of stuff, but they need to see that the companies are going to be able to pay it back. And that they can afford, and that they need the amount that the people are asking for.
So, okay, so people that have got a bounce back loan, because a lot of people have went and took the option of a bounce back loan. What if they now do their cash flow forecasts or revisit their cash flow forecasts, and it turns out they actually need more finance? Can you get both together?
So if you've got a bounce back loan, you can't get another bounce back loan anywhere else. And if you wanted to extend that finance or increase it with a interruption loan or CBILS, you're going to have to look at refinancing. So what they've said is that you can't have a bounce back loan and an interruption loan together, but you can use one to refinance the other and pay it off. That's not a problem. Another thing you can do actually is you can have multiple CBILS. So whilst you can't have multiple bounce back loans and you can't have one of each, you can have multiple interruption loan schemes if the lenders are prepared to lend it. The thing is with that is because they're underwritten like a normal piece of finance, it's unlikely that if the initial CBILS that you've applied for or been accepted for was capped at a certain amount for you, it's unlikely that another lender is going to offer you more because they're going to use the same underwriting or similar underwriting processes. So they'll look at your debt serviceability first. So they'll take the original CBILS into consideration and assess how much more you can get. But like I said, if your existing bank or your existing lender hasn't been able to offer you that amount, then it's unlikely that anyone else is going to be able to. But yeah, in answer to the question, you can take out CBILS to completely wipe out the bounce back loan, and you can go with that, but you can't have one of each at the same time.
And what if your bank doesn't do a bounce back loan or doesn't do bounce back loans?
Well, if the bank doesn't do a bounce back loan, you're in terms of the bounce back loan, you've got a bit of a problem because most lenders have said that they're not taking on any new business in general, especially for the bounce back loan. So you would need to look at another source of finance, probably the interruption loan scheme. Now that's not a problem because you can still go for the 50, if you needed less than 50 grand, for example, you still get that under the CBILS or the interruption loan scheme. But the good thing with that is it's not just your high street banks or the main banks that are offering it. You've got a whole pool of alternative lenders that are offering the interruption loan scheme. So you have a lot more, whilst they've been so far notoriously kind of the success rate of acquiring the finance has been quite low. You have more chance because of the pool of lenders that are out there. Okay. So that you would need to kind of look and see what other lenders are out there that would potentially offer you this. Now that being said, a lot of the alternative lenders have said that they're prepared to do a CBILS finance, but you must have to take another product with them. So for example, they'll offer you the CBILS, but you also need to take on an invoice finance facility with them in conjunction with that. Otherwise,
well, that was my next question. That was my next question about invoice finance, and I'll ask you the question. I know you'll go into it. If you're not getting paid by your clients on time or in good time, there are options, right? Because there's a lot of payments being held back. So do you want to just give us? I know the answer is potentially invoice finance, but why don't you? Give us...
So that was the next thing I was going to say is that these interruption loans and these bounce back loans, they're short-term solutions. They're designed to get you through this pandemic or this epidemic, and you have to be thinking about what about on the other side. People are going to be reluctant to part way with their cash because they're not sure if there's going to be a second spike. They're not sure the way the economy is going to go. So if people are going to be quite reserved in making payments, you're going to need to look at other types of finance, and these other types of finance are within the government initiatives at the moment. So for example, invoice finance, you can actually get invoice finance facilities, but in the form of a C-bills where it does carry no interest. So it is under their scheme. But it would be worth looking about getting a facility like this in place for the longer term picture, where, you know, your invoices can be paid, you know, you can get 80% of your invoices paid as soon as you raise them, which is going to free up so much cash for you to be able to carry on running your business, take on projects that you might not have been able to do because customers aren't paying you. So you need to be thinking about that longer term, like what Mitch and Joe were saying earlier, the short to mid-term or that slightly longer term. Don't just look at that short-term fix where, you know, you can get a bounce back loan. Yes, it's payable over 6 years, or you know, the repayment 6 years. But once that money's spent, that's it. You know, you're going to need to be thinking about that, the consistency of getting that money in to stay alive.
So we talk about invoice finance. Do you still need like a strong credit control system with invoice finance?
Yeah. So there are two different types of invoice finance. Two main types. So you have invoice discounting and invoice factoring. So if you were to look at invoice discounting, you still retain that debtor, if you like, that customer's debt to you. So a finance company would fund part of that invoice, and then you're responsible for collecting it. And then when the money's fully paid, the finance company will pay you the balance less their fee. So in those sort of circumstances, you're going to still need your credit control on point, because you're going to need to chase in that money in to receive the balance of your invoice. You know, invoice factoring is slightly different. That's where you essentially sell your debt to a factoring company. So they give you X amount, you know, a certain percent of the invoice, and then that's it. They're done. The third party will take on that debt. So you need slightly less, you know, less credit control systems in place there. But there are different types of discounting where you can have a full book type of discounting, or a selective type of discounting. So full book is where a finance company will provide this service for this finance for every single one of your invoices, whether you need them or not. You know, if you have customers that are good payers, they will still be financed. But there are other ones where you can actually pick and choose which invoices do get financed, and you could be a lot more selective with it. So in those sort of cases, you know, the credit control system might need to be tweaked slightly depending on who you factor.
Which kind of goes back to having a really strong financial system, talking about
having a really strong,
you know,
exactly, on
using a platform where I think there's potential apps that you can add on that does your credit control for you. I can see in a nod from Yoda, which means that I'm right, which is always a good sign. So yeah, which is really good. So I think it kind of all fits hand in hand. Well, also there's also R&D, right? So we over the last few months we've been discussing R&D and how it's basically, if you've done any sort of research or development, the government are basically giving you free money. Effectively, they're giving money back. So I mean, you probably know more about it than me, or if anyone, feel free for anyone to jump in. What classifies as R&D for people? Because I think anyone who falls into that category should get in touch with us ASAP to find out if they qualify.
It's a very, very wide scope. There's a lot of things are covered in it. I couldn't reel off everything or the exact criteria, but it's a lot of, you don't have to be working in a lab, you know, you don't have to have some sort of techie business to qualify. We're seeing a lot more businesses that initially thought they wouldn't have qualified are actually eligible, and it's resulting in quite significant repayments from HMRC.
And they're paying back quick, aren't they? I mean,
paying back very quick.
No, within like 2 weeks.
Yeah. As a side note, with the R&D increasing, a lot of people are taking on, looking at this and thinking, you know what, I'm going to jump on this and do it. There might be slight delays happening in terms of how many claims they can process. So I've actually been made aware that there are actually types of funding out there that if you've put a claim into the revenue and they've accepted it, but they've just not paid out, you can actually get an advance on that money from a finance company. Okay. So even if they weren't paying out within 2 weeks, which they pretty much are sort of now, is that it's, you know, you can get the money very quickly.
Yeah.
Very, very
I think
quickly.
I think that's great. And I knew that existed. I don't know anyone who's used it yet. But obviously if it exists, then great. But I think what I was trying to say was to anybody who's trying to free up cash, you may be entitled to a decent refund from HMRC. If you're unsure, I think you just have to, you know, improving a product could fall into to R&D. Something as simple as that. Sorry, Yoda, I know you.
Yeah, just broadly. So if you're making a product, if you're doing something that makes your service that you provide or the product that you're making, you know, quicker, better, or more efficient, that's the rules that you need to kind of follow. So it doesn't need to be that you're creating a software that does this amazing thing. It can be. I mean, we've known a company that and I'm going to say it wrong, but they like laid tar for the roads, and they had to use new materials, and them actually having to use that new material in an efficient way, and them having to learn that process counted as research and development. So it's not rigid as being, like Darren said, like being in a lab or creating this, you know, app or something like that.
So if anyone thinks that they may qualify for it, it literally is free money from the HMRC. So get in touch, we'll qualify you. It takes 10 minutes and 10 minutes of your time. And if you qualify, great. If you don't, then, you know, it's 10 minutes of your time to find out. And there are some big refunds. But look, I don't want to, we're a few minutes over. I think thank you to the panel, because I think all questions have been answered as we've gone along. So thank you. I think touching on the accelerator program as well, it's something that I believe I believe, I mean, from being on it, that every business owner should look at. I think that it's incredible seeing people change their mindset and hearing the stories and seeing the stories, people picking up new business, and so on. I know there's people on here watching that have achieved incredible things in such a short period of time from being on it. So I think it's worth looking at that. If anyone's got any more questions about anything that we've discussed today, or absolutely anything at all, then either pick up the phone to us, get in touch. Mitch@nordens.co.uk. I'm sure you've got another email as well if you want to get in touch with anyone. But thank you to everyone who's joined today, and a big thank you to Joe, Yoda, Mark, and Darren as well. We hope to see you all soon.
See you guys.
See you later.
Take care. Stay safe, everyone.